My name's Adam, welcome to the channel. Today we're going to get into GameStop and just explain exactly what's going on, how it may affect your portfolio, and why it's happening in the first place. Let's get into it. So if you've been following GameStop or turn on the news anywhere, any channel in the last 48 hours or so, you'll read that GameStop stock has gone from, in last year, about $4 all the way up to almost $500. That's a big swing. Today alone, as I record this on January 28th, the stock has gone from $112 all the way up to $482. So that's the swing just today, within a few hours. So it's a crazy stock, it's very volatile, but why is this happening? So if we go back to later in 2020, about September, October, GameStop stock was shorted at 142%. That means that people have bet 142% of open shares in the market against the company going down. And this was done primarily by hedge funds. So there's lots of YouTube videos out there that go through shorting a stock and how it's going. Graham Stephan put out a great video yesterday on GameStop and how the shorting of the GameStop has affected the markets and affected the share price. But essentially, there was so much GameStop stock, so tough to say, shorted, that what happened is a group of Reddit, so WallStreetBets on Reddit, basically lumped together, gathered together, and started buying the stock. They started buying future calls of the stock, betting that the stock would go up in price. And that has bumped up against a hedge fund. So now you have hedge funds that are saying the stock is going to come down. And they actually, when you short a stock, you actually buy it, sell it to someone else with the agreement to basically sell it back to them at a certain time. So if I was going to buy or short a stock at $10 and sell it to you for $10, I have to then repay it back to whoever I got it from. And if it goes down, I can buy it for cheaper, pay it back, say for $5, and I make $5. The risk is on the upside. If I've sold it, pre-sold it for $10, and I have to pay back that stock by, say, tomorrow, January 30th, well, if that stock has gone from $10 to $100, I'm out $90 on each stock that I've, lent out, basically. So shorting stock has exponential loss. It can go crazy. And this is what's happened with GameStop. It went from a few dollar stock all the way up to a few $100 stock. And the hedge funds that shorted the stock are losing billions and billions of dollars. So as of yesterday morning, Thursday morning this week, today as I record this, both Webull and Robinhood have stopped allowing trades for both GameStop and other stocks. So BlackBerry, Nokia, and AMC Theaters. Now, they've put a stop on purchasing new shares, but you can still sell it, which basically allows people to dump their stock in the market. Lots of sellers, no buyers. It'll probably bring the stock prices down, which we've seen today. So Nokia, AMC, BlackBerry, and GameStop are down between 30 and 50% today. So again, huge influx of sellers, not as many buyers, stock prices dipped. Since the announcement this morning of both Webull and Robinhood not allowing their investors to buy these stocks, there's now been a bunch of lawsuits that have been filed. So we'll wait to see what happens with that, why Robinhood and Webull stopped those stocks from trading in the first place. There's different theories out there. One of the theories that I saw, which does make some sense, is that when you put a trade in on one of these platforms, the custodian in the background, it takes 2 days to settle these trades, and they're basically fronting that money, so it's quite expensive. With the volatility of these stocks and the amount of trades that are happening, these custodians just can't fund these processes, so they've basically shut it down. So what I've read in some posts is that it's not Webull and Robinhood that have shut it down, it's actually their custodian, kind of the back-end system that they use to make the trades happen. So the shutdown on Webull and Robinhood is really the settlement instructions and the settlement processes that are in place currently in our market system. Now, the flip side of this is people say, well, no, it was shut down because Wall Street will always look out for themselves. There might be truth to that, there might not, I don't know. But the hedge funds, if the stock price of, say, GameStop kept going up and hit $1,000, they have a lot of short positions that have to be settled tomorrow. Okay, so if the stock price kept going up, those short positions cost that much more to fill. Now, if we can keep the stock price down, obviously it's more reasonable to fill. So is there something going on behind the scenes? Probably not, but a lot of people are writing about that. Is it just a fundamental of the settlement mechanics of how trades happen? Most likely. But this is only, the start of probably a bunch of lawsuits, a bunch of explanation, and possibly some changes in the system going forward. When we have crazy moments like this in the market in the past, we've seen new regulations and implementation happen. So when the market drops a certain amount of percentage points, the market actually shuts down for 15 minutes, and it kind of gives everyone cooler heads, and then it flips back on. If it keeps dropping, it will shut off again. So there's been kind of restrictions and processes put in place in the past to kind of help these things from not happening again. And I would not be surprised if we saw some sort of regulation put in place to avoid exactly this happened. So the next time you open up Google Finance, Yahoo Finance, whatever site you use to watch your finance, and you see stocks going up 200, 300, 400%, dig into why this is happening. So again, this Reddit thread, WallStreetBets, has really driven not just this stock, but a bunch of stock. And last year, they may have been behind the whole Kodak stock drive. So be aware of what's going on. Look at the fundamentals of companies. And as you start to build out your financial and retirement plan and build a investment portfolio, be aware, if you're trying to invest on your own, be aware of the companies you're buying into. Like I said, GameStop today went from $112 to $482. That's not a retirement plan. So be aware of what you're investing in. Be aware of kind of the outside sources that are pulling into this. Educate yourself on short calls, long calls, how those work, how they can play into the market, and how they can drive the market in different ways. So hopefully this kind of helped you give a bit of a reference point on GameStop. You've probably seen it all over the internet. Again, hopefully this video helped you just explain what's going on. Again, I think it's really the only start of a lot of things to come, both regulation, implementation, and potential lawsuits. Hope you have a great day. We'll talk to you soon.